investors' bullish bets on stocks have paid off this summer. We've hit record after record, right? So why is the chief equity strategist of Federated bearish on equities right now and come September? He's Phil Orlando, good friend of the program, managing $460 billion at the Federated Global Allocation, or $460 million at the fund, but you've got billions at Federated overall.
Exactly.
Okay. You're fraidy cat over equities? Why?
Valuation's a lot different today than it was at the bottom of the Great Recession. March of '09, when we got very bullish, stocks are trading at 11 times earnings. We're now up at 19 times earnings. GDP growth has been slowing the last 4 quarters.
Right, 1.2% right now.
That's 4 quarters in a row have been very, very slow. Corporate earnings have been down year over year for the last 5 quarters. Everyone says, oh, don't worry about that. The fourth quarter and next year are going to be terrific, but the dollar is strong, energy prices are weakening. It was the reverse of that, weak dollar, strong oil, that is embedded in everyone's models that expecting an explosion of earnings. So we're not expecting more than $115 this year, $125 next year. You've got a 19 multiple, which is pretty rich.
People said stay away from stocks earlier this year, and what did we get? All-time highs on the S&P, all-time highs on the New York, the NASDAQ, and at certain points we saw all-time highs for the Dow. So they missed out on that. What makes you so sure right now that people watching should not be in stocks?
Well, I'm not saying you shouldn't be in stocks. We're cautious, but
right.
We're positioned slightly over neutral. So in our global balanced allocation fund, we're sitting with 62% stocks. That's
okay.
2% over neutral. That's not the 80 or 85% stocks we had at the bottom of the cycle. So we've pulled our horns in a little bit to reflect that nervousness.
Okay, so people might be watching saying, I got a little bit of dry powder here. I want to buy a couple of stocks. Throw out 2 names here that you think should be in people's portfolios.
Well, over the last couple of days, we've seen some very good numbers out of the housing sector. All right. The new home sales yesterday,
huge.
Sitting at a 9-year high.
Great.
Had a little bit of a disappointment in the existing sector today, but again, just off of a 9-year high. So 2 housing stocks that we like are Sherwin-Williams and Eagle. We think that those stocks are very well positioned. Sherwin-Williams in the paint business, Eagle in the wallboard business, and based upon the markets that they're in, the revenues and the earnings they're going to generate, we think those stocks could be up 15% or so over the course of the next year.
Yeah, Sherwin-Williams, a fine Cleveland-based company.
Absolutely.
As you look overall, and we're going to have a little bit of a troublesome day, particularly for the NASDAQ. What do you think is at work here? Is it just a quiet summer day, or do you think Janet Yellen is going to say something on Friday that somehow gyrates these markets? I
think there's concern about what does Dr. Yellen say at Jackson Hole with her keynote speech at 10 o'clock.
Friday.
Friday. The problem is that the vice chairman, Stan Fisher, over the weekend gave a speech in which he basically said, you know what, our labor market metrics are where they need to be. Inflation is almost where it needs to be. We may be at a point where we can start to tighten. So the market's looking at Yellen's speech Friday saying, is the Fed going to tighten or not in September? I think that's what the market's worried about.
We will have that speech right here on Fox Business because Peter Barnes is there. Phil Orlando, Federated, thank you so much.
Thank you.